Hello everyone. This is the pre-market report video for today, 11th July 2024 for the Indian stock market in terms of Nifty and Bank Nifty. Yesterday, for the 16th time in the last 27 trading sessions, Nifty reached an all-time high value at the time of opening. Then comes the news from two firms. First, Bank of America, which released a statement that they were downgrading HDFC Bank share from a buy rating to neutral with a price target of 1,622 rupees per share. Just for info, their earlier target was around 1,850 to 1,830 rupees per share. So from that, they dropped the target price by 200 rupees per share, which was massive. They cited that all the positives that the bank had were already factored in. This in turn started the sell-off. In addition, at the same time, another foreign brokerage, Nomura, released what they expect the quarterly results of each Indian bank to be in terms of net interest income and profit. In that overall assessment, considering loan and deposit growth rates, only Federal Bank was the exception. So that might be the reason why yesterday Federal Bank alone closed positive, whereas all other banks were under pressure. And in terms of other stocks, there was a nervousness in the IT sector, which is understandable since TCS is going to release its quarterly results today in the aftermarket hour. In case of Mahindra and Mahindra, they made an announcement that as a special celebratory, they discounted the ex-showroom price for some of their SUVs like XUV 700, which they slashed the price by up to 1.5 lakh rupees per car. I mean, the market doesn't like it when a company slashes its product price. One, slashing the product price will reduce the profit margin. Two, any company will reduce its product price only if they have less demand than supply. So both these factors were very negative. Hence, yesterday M&M dropped over 6.6% and dragged down the whole auto sector. On Tuesday, auto sector was the top positive contributor, increasing over 2% because Maruti Suzuki increased over 6%. Yesterday, the table was turned. The auto sector was the major dragger as M&M was down over 6%. Metal, PSU Bank and IT were the other major sectors that down over 1%. On the other hand, energy, FMCG and pharma improved slightly. If you look at the overall market, 72% of the stocks closed negative, only 25% closed positive. Because of this broader market negativity, yesterday was the Nifty's biggest fall in the last 30 days, or we can say since the election results day. If I say it like that, it really sounds scary, isn't it? But please don't worry, the drop was only 0.5%, not much. For the sixth day in a row, FII were the net buyers as they net bought for 584 crore rupees. DI were also net buyers for their third straight day with 1080 crore rupees. So together, institution-wise, around 1,650 crore rupees were added to the market and the total long-short ratio of the foreign investors increased to 1.39 from 1.35 a day earlier. So they increased their positive expectations. Those were the things I wanted to highlight about yesterday's Indian market. Now moving to US market. First, about the Fed chairman's speech in the lower house, he simply repeated the same thing he said on Tuesday in the Senate. Either way, that was positive because he's signaling a 25 basis point rate cut in September. In addition to that, there are some stock specific positives like Apple expects to sell 10 million units more in 2024 than it sold in 2023. So Apple stock rallied. Then Nasdaq released its open interest stats data, and as per that, the amount of short positions in Nasdaq dropped by 2%. All these factors and the short covering due to the inflation data released tonight made the US market close very positive. For the first time, S&P 500 crossed the 5,600 mark. In the end, Dow Jones increased by 1.09%, S&P 500 increased by 1.02%, whereas Nasdaq was up by 1.18%. Despite all three major index increases, VIX also increased by nearly 3% and moved near 13. So with both price increase and VIX increase, we can confidently say it's a short covering. Coming to Indian ADR, ICICI Bank, Infosys and Wipro closed very mildly positive despite all closing negative in the Indian market yesterday. However, due to the Bank of America downgrade, HDFC Bank alone closed negative, at least 1% more negative than the Indian market. So from ADRs, it indicates that IT sector is showing some signs of positive trend, whereas banks are sending mixed signals. In line with that, GIFT Nifty at 3 a.m. Indian Standard Time closed at 24,407, equating that to the spot market indicates a gap up opening of 50 to 70 points. Regarding oil, it hardly changed, increased by 0.5%. At the time of this video, Brent crude trading near 85.5 US dollars per barrel and WTI crude is at 82 US dollars per barrel. So this is what happened yesterday in the global market. Now let's move to the Indian market related info. First, about the TCS quarterly results. If required, please pause and have a look. I took the snip from the Money Control website. Basically, they compiled the 10 brokerages revenue and profit expectations. So on an average, all those 10 brokerages expects TCS revenue to increase around 1.5% compared to a year ago to near 62,200 crore rupees. Whereas profit wise, it is expected to drop 3.5% year on year with the number expected to come near 12,000 crore rupees. So those were the expected numbers and market is already prepared for the worst, a 3.5% dip in net profit. But by chance, if the profit increases, then that will turn the momentum on the positive side. If it comes out worse, then it's disastrous for the whole IT sector. Second, Moody's, a global rating agency, increased the Yes Bank's rating from stable to positive. So today, Yes Bank will be on focus. As a summary, US market closed super positive, but that positivity was not transferred to GIFT Nifty as it's indicating only a gap up of around 50 to 70 points. Additionally, the more negative HDFC Bank ADR and expiry day volatility might be party spoilers today. Then as per stock open interest, M&M, RBL Bank, Hindustan Copper, Ambuja Cement, TCS and Infosys got an increase in open interest along with a negative close indicates the short build-up. On the other hand, NTPC, Britannia, Motherson, Dr. Reddy's and Godrej Consumer Product got an increase in open interest with a positive price close indicating the long build-up. Then about the things to look out, during our market hours at 11:30 a.m., UK's GDP data is due and in the afternoon, Germany's consumer inflation data is expected. Finally, at night, US consumer inflation data, the usual US weekly jobless claims data and 30-year bond auction for June month are scheduled to release. Coming to technical, Nifty opened flat and touched a fresh record high. However, as the day progressed, it erased all the gains and had selling pressure. Then again recovered some losses and closed at around 24,320. Thus, on the daily chart, if we consider the single candle, then it's a hanging man formation. And if we consider the last 2 days, then it formed the bearish engulfing candlestick pattern, both indicating a potential reversal, but a confirmation of a negative candle is required today. So Nifty found support just above the upper band of the rising channel on the lower end, and a move below 24,200 will confirm a short-term trend reversal. Till then, uptrend will remain intact. Hence, the immediate support is at 24,270 and on the higher end, resistance is at 24,350 to 24,400. In case of Bank Nifty, it opened 70 points gap down at the day's high and then selling pressure dragged it down to close at around 52,190. Thus, on the daily chart, Bank Nifty formed a bearish candlestick pattern with minor upper and lower shadow. In the last few trading sessions, Bank Nifty was unable to surpass the 52,500 mark and it continued to have selling pressure at that higher level. So 52,500 is the resistance to break. At present, Bank Nifty is trading near a crucial support zone of 52,000 to 51,800. So a sustained move above 52,500 will open up gates for 53,000. But if it fails to hold the support of 51,800, it can decline further towards 51,300 to 51,000 zone. Regarding the weekly options data, the maximum call option open interest was at 24,500 strike, followed by 24,600 and 25,000 with maximum new call option rating at 24,600 strike and then 24,500 and 24,300. Whereas on the put side, the maximum open interest was at 24,000 strike, followed by 24,200 and 24,300 with maximum new put option rating at 24,000 strike and then 23,900 and 23,850. Thus, from options data, 24,500 is expected to be the resistance for Nifty with support at 24,000. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this as I'm not a SEBI registered advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.